Jordan. This video is being recorded on Monday, October 16th, 2023. Thank you so much for tuning in today. In this video, going to talk about the outlook for gold and silver, especially after that upside explosion at the end of last week on Friday. And so here we have daily bar charts of gold and silver. And starting with gold, and this doesn't include today's action, you have a little bit of a decline, less than a 1% decline in gold and silver. So very mild. You can't quite see it on this chart, but we do have some false breakdown potential across the sector. For gold, this was an important level around 1820. But also looking at the 40-month moving average and other long-term support moving averages, like if you use a band of long-term moving averages, they all, and I've mentioned this in numerous past videos, they all were coming in around the 1840, 1860 area. So you have these moving averages here going like this. So the gold coming below that and shooting up like this, I mean, that's false breakdown potential. You can also see it some other charts, which I'll talk about in another video. I mean, most notably looking at gold against the stock market, gold against foreign currencies. A week ago, it looked like those had broken down to new lows and we're headed for some potential lower lows. Instead, they shot right back up, very similar to what we see here in gold, around 1850. So now, if this move has legs, we've talked about it in past videos. I mean, 1980 to 2000, there's really stiff resistance here. So yeah, you had this huge move, and maybe gold spends most of this week digesting it, or at least for another day or two. If you get a nice consolidation here, maybe it turns into a bull flag, and then you can go like that. It's just one possibility. Looking here, if you get more of a sell-off, you have support here, right around 1900, the very high 1800s, but. For gold to, at least in the short term, to be able to pop back up and test 1980 to 2000, you probably want it to digest and hold most of this gain. So, you would like to see gold hold, at least 1/3 to half the gain. So half would be, if we're around 63, so 19, so half would kind of be around here. So, even if gold corrects for a little while, it does something like this, it's still holding, the bulk of this gain. So that would be bullish. And the same goes for silver. So looking at silver, you have the 400-day right here at 22.39, also support here. So, if silver is going to pull back, my target would be here. And, this is also a false breakdown because you have the 400-day moving average here, held it 3 different times, broke below it. It's like, oh shit, it's going to come down here. That's what I was thinking. Boom, then back up. So you very well could have a false breakdown here as well. But there's still, if silver is able to rally, you're looking at 24 and a half. There's a lot of resistance here. So good moves for the metals, obviously, but they're going to be running into a lot of resistance soon. So we'll see how they digest that, if they're able to do that. Now, just looking at the miners, after today, it looks like this move is continuing, and they're going to be able to, move above the 50-day moving average, which you can see in blue on this chart and blue here as well. So starting with GDXJ, and this is also the 200-day here. Looking at the 50, so the 50-day is here is in blue, and you can see, kind of resistance here, market went above it, resistance here, resistance again, but now the market is pushing above it, and so that should bring 36 into play. Then you have the 200-day here at 36.80. So in the short term, it looks like miners have a good shot to continue this rally and, possibly test this area fairly soon. On the other hand, you have a huge gap here. So if this is going to sell off, you'd want to see it hold here, call it like 33.30, or at least the low of Friday, where Friday opened right here. So as long as it stays above there, it's got a good shot to probably continue up to 36. Same goes for GDX. The 200-day couldn't show it on this chart, but it comes in around 30.50, and looking laterally, just at 30 or a little bit above, That is an area of resistance. You can see it's GDX has surpassed the 50-day moving average. So I think this can continue probably up to 30 and a half. Again, as long as we see this gap here, this is a huge gap from 27 and a half up to 29 and a half. So as long as GDX holds this gap here and doesn't refill it, you're probably going to see in the short term an upside move to 30 or 30 and a half where the 200-day is. So that's the short-term take on gold and silver and the miners. Very interesting. I mean, bigger picture, do we have false breakdowns in the sector? I mean, what we saw last week before Friday, were those false breakdowns in the sector? And if they are, false moves lead to fast moves. So that's what we have to look for. If we see a lot more strength throughout the sector in the coming days, that could potentially confirm that there were false breakdowns. One thing I'll be looking at with respect to the miners is the breadth indicators and specifically the advanced decline line. Because at the beginning of a rebound, you want to see that advanced decline line really strengthen, because when that happens, that signals that the move is really broadening and participation is increasing, and that tells you that the move is going to have legs, basically. Now, last thing, back to the stock. You don't see it in this chart, but like here and here, my breadth indicators were extremely oversold. I mean, I was here, we're selling off, and I was telling subscribers, we're probably going to see a short-term rally and oversold bounce, because the breadth indicators, other than new 52-week lows, every breadth indicator was extremely oversold. Like if we saw tons of new 52-week lows, it could have been comparable to 3 or 4 of the major bottoms that we've seen in recent years. So the sector got really oversold here as well. And the same thing for gold. If you look at the COT, and I'll have to do this in another video, but if you're looking at, you've probably seen the charts, managed money. I should have included those. The net speculative position. Those things all were at a oversold extreme. So this market was going to rally for more than a week or two based on how oversold it was. So have to keep that in mind. Potentially really exciting ahead if we get confirmation of a false breakdown. Enough babbling from me. Let me know what you think in the comments. Talk to you guys again in the next video.